Hello, everyone. Welcome to 321 Q&A session number 6. In this episode, we have a very special guest, Nick Kuriya from Purpose Investments from Canada. They are the issuers of the Purpose Spot Bitcoin and Ethereum ETFs. We'll ask them 3 important questions. Then we'll cover 2 important Twitter threads on the interoperability of the blockchain space that our users need to be aware of. And we'll finally analyze the Binance Bridge DeFi hack. So Nick, thanks for joining us today. Can you tell us a little bit about Purpose Investments and what you guys offer, and how are you involved in the crypto space?
Thanks, Pratik. Thank you for having me. I'll give you a little bit of background about Purpose Investments. So Purpose Investments is part of Purpose Unlimited, and Purpose Unlimited is a financial technology company. We are innovation-led. We're based out of Canada. And we've got 3 business units. We have Purpose Investments, which is an asset management business, and Purpose Investments launched the world's first Bitcoin and Ether spot ETF. We have a second business unit called Purpose Advisor Solutions, which is focused on building out technology platforms to enable advisors to build independent advisory practices. And then we have a third business called Driven, which specializes in providing small and medium-sized businesses with credit and loans. So that's sort of the Purpose family of companies. I joined Purpose about 6 months ago. My background is sort of a bit eclectic. It's a combination of, I started out in management consulting. I'm an engineer, electrical engineer, sort of by trade. I spent some time in corporate development, deal making effectively. I then also led a technology-enabled venture, so started a new venture and scaled that. And I joined Purpose, recently as head of crypto, and really focused on, building upon a leadership position that we've developed, in launching the world's first Bitcoin and Ether ETFs. And growing that platform because we have a deep thesis on crypto and we certainly recognize some of the potential and capabilities crypto offers. So excited to join and happy to talk about the space.
Great, fascinating. I would have a question leading on to crypto and Purpose Investment involvement. What would be your take on Coinbase Circle and the way that stablecoin issuers generate money? And how is this similar or maybe different than Purpose Cash Management Fund? But on a broader spectrum, maybe you can talk also about stablecoin and how institution can benefit from it.
Yeah. So look, I think there's been a lot of chatter around stablecoins, especially given sort of what happened with Terra and Luna. I think it can become a bit of a trap to sort of paint, stablecoins with one brush, right? You really have to sort of step back and ask yourself, what role stablecoins really play, and they play a very important role. When you think about the crypto economy and the crypto ecosystem, part of what is going on is really we're building a decentralized banking system, right? Like a decentralized financial system in the crypto space. And one of the core components and core foundational building blocks that's going to be required to do that is this concept of a stable coin, because ultimately financial systems are built on trust, right? And although the first crypto assets, Bitcoin, Ethereum, and others, they've proven to be very resilient networks. One of the big, criticisms of crypto has been sort of the extreme volatility, right? And when you think about people really trusting crypto and the ecosystem, with as a store of value, as a financial, form of representation. You really have to have that level of trust, and it's really hard to do that when the volatility, is actually quite high. Like think of just basic products. You think about like the most basic financial principle, which is lending. bringing together, people who have capital and people who need capital and connecting them. How do you lend, on a product that where the value sort of is so volatile, right? It just becomes, fundamentally difficult to do that. And that's where, the role of something like a stablecoin comes in, right? What a stablecoin allows you to do is it allows you to sort of, provide a bit of a scaffolding and almost like, provide a crutch that says, okay, look, we're going to smooth out the volatility, right? Now, how have we implemented stablecoins? And there's a variety of schools of thought, but, when you think about stablecoins, there's really, a couple of different, types, right? So, you have what Circle has launched, which is, an asset-backed stablecoin, which is really pegged, 1-to-1 to US dollars, right? Essentially what they're saying is, look, our coin is worth $1. And the reason it's worth $1 is because we have a in reserve that backs the value of it. So that to me, is just a very easy, intuitive concept. So I think like it plays a really important role. Look how they generate money. That's where the slippery slope comes in, right? So if you're Circle, you're sitting on all these reserves of US dollars, and they're just sitting there, right? And that hey, on any given day, I'm sitting on this reserve of US dollars. It's earning me, I don't know, almost no interest, maybe sitting in, some bank account I've got going on. And then the temptation comes in. It's like, okay, well, why don't I, invest this in T-bills? Okay, they're quite liquid, relatively safe. It's like, okay, then you sort of, follow that logic, and then it's like, okay, well, why not, increase the duration of those T-bills? Okay, you earn a little more yield. Okay, I don't need the money. Then it's like, oh, wait a minute, here's a really safe investment. It's a mortgage-backed security, backed by the government. And so you can start seeing that progression, right, of risk. And it's like the classic risk return curve, right? The more risk you take, the more return you get. And when you're sitting on, this sort of pile of reserves, it's just sitting there, presumably not really doing anything. The temptation to generate those returns becomes, increasingly large. So I think it's going to be really important for, there to be some discipline, in how these stablecoin issuers sort of manage their reserves. I think, some of it is also buyer beware, right? So unlike, a fiat government-backed currency where, frankly, by law, governments can legislate kind of use of a currency in a country. I think with stable coins, there needs to be a little more diligence on the part of the user. And I think, at the same time that there probably needs to be some form of discipline, that the industry enacts. And frankly, if the industry doesn't enact it themselves, at some point, regulators are going to force them to do it, right? So, you have the choice. Either you self-discipline yourself, or you wait until there's some bad actors that create scenarios that attract attention. So I'd like, that's how I would look at sort of the stablecoin ecosystem, but really fascinating space, I would say.
Insightful. I would have a follow-up question regarding what you mentioned about discipline for those stablecoin issuers. So what would be, in your opinion, the safest or more secured way to manage treasury, basically reserve of a stablecoin issuer? So you mentioned T-bill, but would you think that there's other way to generate some type of yield on those reserves?
Yeah, look, I mean, this is a classic, cash management strategy, right? And it's, you always have to sort of balance your yield with liquidity and risk. And on the liquidity side, it's like, if you ever have a run, on the coin, you have to be able to honor, those redemptions. And so that's something that you got to manage is liquidity, right? And so can you access liquidity? And so any instrument that's being used, obviously that's a top consideration. I think it really comes down to sort of a blended approach, right? And you may see a world emerge where there's different grades of stablecoin. just like today, there's different levels of cash investments. Like you could, put your money in a money market fund. You could put it in a high interest savings account. You can put it in a checking account. Like there's just so many places you could put it in a term deposit. There's just so many options, right? And they each have their own sets of characteristics. They pay different yields. You could lend out your cash as private credit. You can lend it out, so there's all sorts of methods. And you might actually see different stablecoins that get issued, that are sort of backed by different, treasury management strategies. And each of those may carry different risks and different rewards. And so you might have, a stablecoin that yields 2% that is very safe, and it's all in, sort of highly redeemable, T-bills, right? Or maybe even, held in cash, so you could have that on one end. And then you might, on another end, have, a stablecoin issuer that says, look, we're going to hold, a diverse portfolio of generally low risk assets, right? So that, that could be sort of, part of how the sort of the landscape evolves.
So Nick, coming back to ETFs, Purpose is the first ETF to launch spot for Bitcoin and Ethereum. I'm wondering, why is US lagging? Why was Canada a go ahead with spot ETF, but US is still holding back? And is there anything like the BlackRock's collaboration with Kraken and Coinbase? Do you think those things are gonna make it happen, or there's some other reasons why this is not happening in US and it already happened in Canada?
Yeah, so I think there's a couple of things. One is, I think in the US, the major hurdle, right, as to why spot crypto funds have not emerged yet, is purely regulatory, right? So the SEC, have not granted approval, and the logic that I think they've provided, at least my understanding is, they've deemed crypto, Bitcoin and Ethereum, as commodities, not securities. And so there's a test that the SEC applies. It's called the Howey test, and the Howey test, has sort of 4 prongs to it. And the Howey test is used sort of by the SEC to determine, where they have jurisdiction, because they're really the Securities and Exchange Commission, right? They're not the commodities, and so there's another regulatory body, and I'll butcher the acronym, that sort of regulates commodities. So what the SEC has effectively said is, look, crypto fails the Howey test. It fails the Howey test for sort of, I think the 4th prong, which is, it suggests that, is the value generated, through the efforts of others, right? And I think the argument is, look, Bitcoin, Ethereum, they don't generate their own cash flows. It's not like there are people out there that are like management of a company that are trying to increase the value of Bitcoin. Bitcoin just trades because it's supply and demand, or Ethereum, same thing, right? So given that, that's the SEC's interpretation, they've effectively said that, look, this, we don't really have, full jurisdiction on this. Therefore, we need collaboration with another, government regulator, to do it. And I think that's where the, sort of the roadblock steps in, because now all of a sudden you've got 2 regulators that have to sort of collaborate to make this happen and build alignment. It's already difficult enough to sort of get over the bar with a regulator. Now you've got to coordinate. Not only do you got to do that, but you got to coordinate amongst 2. And I think that's probably, one of the big reasons that this is being held up in the US, right? And I think in Canada, ultimately, look, we received approval from the OSC to go forward, and so I think they had a bit of a different interpretation on how to sort of how they would classify cryptocurrencies. So I think it's really an interpretation dilemma, right? The thing that BlackRock, some of the partnerships that they're exploring, and look, others as well, there's many players that are trying to make this happen in the US. And look, I mean, I think, I'd say, like, any sort of initiative is a good thing because it means people are trying, right? And they're having this dialogue, they're testing, they're experimenting. At some point, those experiments will create the impetus for regulators to really look at this and make it a priority, right? And find a solve, right? Because if the market really demands it and needs it, that there needs to be solved, right? I think that's kind of one part of the story. And then the other part, that the SEC, I think, has also talked about is, this idea of being concerned with market manipulation, right? And so they, I think they're still looking for some sort of satisfaction on, just reassure us that, this, investors are protected and that, these markets are not prone to market manipulation. And that one's a bit trickier, right? I think that one, structurally, it's a bit trickier because, crypto in some forms, is permissionless, right? So you don't really know who's behind the scenes, and you don't really know who's acting on whose behalf, right? So I think that is a tricky area to navigate. But I think those things are solvable, right? Like, you can, we've got centralized exchanges and there's KYC, AML, there's all sorts of, process that you can put on that. So I don't believe that that's going to be the holdup. I think it's really around the, getting two government agencies to coordinate.
Interesting. I definitely share this point of view about almost like at some point there will be too many institutions or regulated, if I could say that, regulated institutions that are entering crypto, like BlackRock, Nasdaq. So really pushing regulators to do the work, although they're doing it right now, but really speeding it up the work. And I would say BlackRock, the deal might have been in the works for quite some time, right? Since they announced it, right? That's not something that they can just do it just by a snap of a finger. So definitely sharing this point of view that the more entrants will definitely spark better regulation and hopefully onboard even more institutions into the space.
Yeah. Look, I mean, there's many examples of this, right? You look at, take the taxi industry and Uber, right? They operated in a gray area for a very long period of time, and we're starting to see emergence. Airbnb is the same thing, right? Like you're seeing, regulation emerge, right? Because it's too big now. You can't put the genie back in the bottle, right? People already use it in such a widespread manner. I think everything I see is like, let's call it like 20-25% of the population have bought or sold crypto, right? And so again, not a niche, right? It's actually quite a widespread, widely used product.
So you have advisory services as well. I'm just curious, are you advising anybody in the US to launch ETFs, or you yourself are planning to launch an ETF if they approve, if the regulations happen to be favorable?
No, so our advisory solutions business is really geared towards financial advisors. So if you think about, in the U, call them what they, registered investment advisors, so RIA. So these are like financial planners, financial advisors that work with individuals and families to help them, build a financial plan and manage their wealth, right? And so we have a business unit that focuses on building solutions. So, technology platform, back office functionality, portfolio management as a service, that provides all of those capabilities to financial advisors so that they can run their own independent practice. We allow sort of advisors to, operate under, various different models so they can retain their own brand, right? So, if you had your own sort of, let's call it, financial advisory practice, with your brand, we would power that, but, in a white labeled manner.
Got it. Jerome, do you want to add anything to it? Any final words?
I would say, yeah, on the institutional adoption, we recently published a report talking about the different barriers to entry about that the institution face, most notably custody, access to trading and best execution, amongst other topics, and readers can look for it on our website.
Awesome. Nick, it was a very powerful, valuable lesson. So thanks for your time. Thanks for joining us today.
Okay, no, thank you guys. Appreciate it.
Take care.
Take care, guys. Bye.
Moving on to two Twitter threads that our users need to be aware of. The first one is Swift is working with Chainlink, which is a provider of price feeds and other data to blockchains. They're working on a cross-chain interoperability protocol, which will enable Swift messages to instruct on-chain token transfers. So let's back up and first of all see what is Swift and what is Chainlink. Swift is the interbank messaging system that allows for cross-border payments. And Chainlink is a provider of price feeds, which is the oracles, and other data to blockchain industry. So they're working together on a cross-chain interoperability protocol, CCIP, which will enable the Swift messages to be sent on-chain token transfers. This will help the interbank network to communicate across all blockchains. Chainlink co-founder Sergey said that this will accelerate the adoption of blockchains and benefit various institutions across capital markets. Swift's strategy director, Jonathan, said that one of the reasons they're working with Chainlink on the CCIP has been successful is that there is undeniable interest in crypto from the institutional investors. TradFi players want to access various digital and traditional assets on one network that can connect different types of asset classes. So, Jerome, what do you think about this news?
Well, there's no doubt that we need more interoperability in crypto, and this partnership is a key highlight, I would say. So there is really too many layer ones and layer two chains in different technical languages, basically the coding language that you need to use them, which is making it harder in order for you to use your asset across all of them. And then on top of that, you need to use bridges which add complexity on top of that. So this partnership is very good sign that the traditional payment rails, which will enable the major bank across the globe to experiment with it and hence use a very well established protocol in the DeFi space, such as Chainlink. So we'll see how this proof of concept goes in the future. So this concludes Twitter thread number 1, leading on to Twitter thread number 2, talking about Circle and interoperability. So Circle, the company behind the USDC, has announced the launch of a cross-chain transfer protocol that will support USDC interoperability. This new protocol is permissionless and enables USDC to be sent natively, not wrapped version that you can have in bridges, across ecosystem, improving liquidity and reducing fragmentation of bridged assets. Developers building wallets, bridges, payment apps, financial services tools, and more will be able to deliver simple cross-chain USDC transactions, simplifying the user experience and maximizing capital efficiency. Developers can build new experiences that stack together the various functionalities and benefits of trading, payments, NFTs, gaming, and more. Allbridge, Avalabs, Avalanche, BitGo, Layer 0, Socket.tech, Warhammer Crypto will be the first to integrate, amongst other, this new cross-chain transfer protocol within the platform. So it is expected to go live later this year on Ethereum and then on Avalanche mainnet. So Pratik, tell me what would be our take on that?
Again, this signifies that there's so much need for cross-chain support for native tokens, right? So far, we've managed to use wrapped versions of USDC or USDT on chains that do not support native assets directly. But it's clear that the wrapped versions are not the most ideal way of expanding to newer chains, as the stablecoin issuers cannot really track these wrapped versions. Or, for example, they cannot blacklist them in case of a hack. So overall, this interoperability of native USDC and USDT on different chains is a positive for this space. And I think we will also see other stablecoin issuers apart from USDC take this path as well. So that concludes our Twitter thread number 2. And we move on to the last segment of this Q&A, which is one DeFi hack. And we are investigating the Binance Bridge hack, which initially resulted in $500 million plus stolen. So Jerome, can you tell us about what this hack is about?
Yeah, sure. So first, we need to understand what is Binance. So Binance has two different chains. So one is called the BNB Beacon chain, and the other one is the BNB Smart chain. And then they use a bridge which they call BSC Token Hub Bridge, and this one has been exploited, and the hacker was able to withdraw 2 million BNB, worth at the time around $570 million. So the BNB chain was halted after the exploit was discovered. A tweet from the official BNB chain Twitter account indicates the chain is back in operation after pushing out a software update which hotforked the chain to freeze the hacker's account. The chain validators adopted the software updates that would essentially prevent any further exploit of this hack. So we need to know that the attacker executed the exploit was by forging proof of validity on two separate blocks. So this is the second hack of its kind, where the first one was wormhole breach that suffered an exploit from a similar attack vector. So in short, there was a bug in the way that the Binance bridge verified the proofs, which allowed the attacker to forge arbitrary messages. Fortunately, the attacker here only forged 2 messages, but the damage could have been far worse, essentially withdrawing much more liquidity from the bridge. An interesting thing to note here is that Binance is the largest user of the Cosmos software, both Tendermint and Cosmos SDK, and the Binance Token Hub inherits from Cosmos IBC repo. IBC stands for Inter-Blockchain Communication, and is a protocol for interoperability between different ledgers. It is being designed and implemented as a core component of the Cosmos network, where multiple Tendermint-based or non-Tendermint-based ledgers connect to each other, as per Cosmos Medium. The crux of the problem is that the hacker was able to essentially forge a Merkle proof. A Merkle proof is a cryptographic proof. Many blockchains store the data in the Merkle tree so that proofs can be produced proving some piece of data is included in the tree. Merkle proofs are used heavily in IBC so that, for example, one blockchain can prove it has a packet destined for another. Of course, it would be a big problem if you could prove that some piece of data is in the tree, but it actually isn't. This is basically what happened in short with Binance Bridge. So what's the take on the bridge, Pratik?
So first of all, I want to make clear that Coinchange does not participate in liquidity provisioning on any bridges. So such hacks do not affect our user funds. Secondly, I think we must start taking this security very, very seriously. This incident is an opportunity to remind everyone that it's important to have strong security practices in the software development lifecycle. And we need to spread awareness about what IBC is and how it works, the Cosmos IBC, and invite the entire ecosystem to help improve this IBC. And this should be true for other type of bridge implementations as well across the ecosystem, as they're the key to a successful interoperable crypto landscape. So that concludes our session for today. We'll see you in the next one 2 weeks from now. Meanwhile, kick back and earn passive income using Coinchange. See you, everyone.
See you, everyone.